My next guest on Founder FM straddles two worlds. On the one hand, he was born in South Korea, but was educated and lives in California. On the other, he was an entrepreneur and founder of a number of successful tech startups. And now he's on the other side of the table, a VC and general partner for Spark Labs, a startup accelerator in Korea. In this interview, Bernard Moon shares with us some insight into the life of a VC general partner. What are they looking for in their deals? How can you, as a startup founder, stand a better chance of winning his attention? We also discuss case study success stories from his portfolio, including Mimibox, which recently raised $29 million in funding.
Founder FM. You're listening to Founder FM with your host, Graham Brown.
Hello, welcome to Founder FM. My name is Graham Brown. Today I want to introduce you to a VC, a global investor and technology entrepreneur. Today we're going to talk about what VCs do, how founders can better communicate with VCs, and what exciting trends VCs like Bernard Moon are looking at in 2016 and beyond. Welcome to the show, Bernard.
Thanks, Graham, for having me on.
Well, it's good to have you here, all the way from Silicon Valley, the hotspot of internet VC activity. You were born in Chicago. Oh, sorry, you were born in Korea. You moved to Chicago, and now you are in Silicon Valley. You were previously an entrepreneur with VidQuick, founder of a web conferencing and sales solutions platform. But now you're on the other side of the table as a VC. How has life changed from going from being a founder to a VC, Bernard?
I don't think it's changed that much. I mean, that's something that my co-founder, Jimmy Kim, and I, we talk about. Jimmy and I, we actually co-founded our first two startups together. And at that time, since we went through so much pain and suffering, we decided to always give free advice to other entrepreneurs. So we were always willing to, give advice, any insights, contacts, etc. And now we feel like once we launched our accelerator in Korea in 2012, we were sort of just doing the same thing, but adding a $25K check. And now since we launched a global seed fund, now we add a $500,000 check. And so it's sort of like we're doing the same thing we did before, and we're just adding money to it.
Right. So you see yourself primarily as an advisor, as a mentor to these entrepreneurs?
Yeah, I guess that would be a lot of our role as a VC, is just helping these companies out in terms of, their product, marketing, PR. I mean, I must have written like 20 press releases for our company so far, just doing a lot of like groundwork for them, just because they might not know how to do it or they need just the first initial steps. It's a lot of, coaching, advising, mentoring.
Right. So you are the co-founder and general partner of Spark Labs, which is a startup accelerator based in Korea. And you're the co-founder and general partner of Spark Labs Global Ventures, which is a global seed fund. We're going to talk about the kind of investments and markets you're involved in and the ones that excite you at the moment. I'm curious to know why you made that switch, because a lot of founders, once they've sold or exited a business, often go and start another startup. Why did you then decide to sit on the other side of the table and start being involved in the investment side of startups?
I think just the opportunity came up when we had good momentum from the accelerator in Korea. We built a strong brand, not just in Korea, but I think regionally and slowly globally. So, even our Korean accelerator, we now get applicants from 20 different countries apply. The accelerator in Korea now hosts the largest demo days in the world. The past two have been over 1,400 people attending. So it's sort of like, we sort of unintentionally created this beast. And then from that, decided to do a seed fund. And then obviously one of us needed to do it full time. So I was one of the people, along with my co-founder, Frank Mien in London and Nat Jacobson in Tel Aviv.
So what exactly do you do in the accelerator?
The accelerator, that's probably about 20% of my time or so, because we have 4 full-time people running the actual program. So the co-founders, Jimmy, Hanju, and I, it's definitely more at a high level in terms of partnerships, thinking about expansion into other cities. I'm the one at the high level that manages probably most of the mentor relationships, since a lot of them are my contacts, because we have now 120 active mentors. Our mentor program is probably one of the more hands-on, where we assign 4 to 6 mentors for each of the companies. So I sort of go through that process, match up the companies during each batch with the mentors, and then just actually go out and recruit new people too.
Right. So For startup entrepreneurs who are thinking about entering an accelerator or maybe have just started, I think, the results that can come out of that accelerator are quite varied, aren't they? You've obviously got, everybody talks about the drop boxes of this world as sort of, the paragon of what people should aim towards when they come out of an accelerator. But this is quite an exceptional case, right? But there's a lot of success stories. There's also a lot of people who sort of get swept by the side and don't make it work. What do you think really determines how a startup or what makes them successful in an accelerator?
I think it really is both sides in terms of how engaged, obviously, the people on the accelerator side are and how committed they are, and also how committed the entrepreneur and the founders are in terms of not just committed to the idea of going through the program, but really hustling and really optimizing all the resources that they could get through the accelerator program. We went through some learnings in our early classes, probably the first 2 or 3, and we're still adjusting. One example is if we have more of a engineering CEO, and the similar problems occur also in Silicon Valley, they're not that socially engaging. So then they might not take advantage of the mentors or the contacts we provide them. They might not be as sort of aggressive in doing so. So we have to sort of handhold them. That's what we learned. And then it's a double whammy, especially if it's just in Asia, culturally, they're a little more reserved. So they might not want to take advantage of that, or they say, oh, these people, they're so important, I don't want to bother them. We have to tell them, we're like, no, they volunteered. They said they want to help you, so follow up. Right? So
sometimes you find that founders are a little bit reserved, a little bit reticent to contact the mentors and ask them for time. Are people a little bit scared of that?
Yeah, some of them are, surprisingly. I mean, it's a minority, but it's still a significant minority. I don't know. The first classes, it might have been a third of them that we actually found out that we had to handhold them through that process.
Right.
So, but they've been getting better, obviously, through each class. So.
So when startup entrepreneurs approach you to enter your accelerator, what do you look for in terms of the criteria, both in terms of the person and also the product idea and so on? What really excites you?
I mean, at the accelerator or seed stage, it really is about the team, right? I mean, well, the product, first of all, has to excite us. But then beyond that, it's the team. It's like, do we trust these founders? Can they execute? Do they have the hustle? I mean, our team always talks about hustle a lot, even though it's sort of fuzzy and intangible. But, is that person really a go-getter? Are they gonna like run through brick walls to make their company succeed, right? And sometimes that is hard to read because, it might be some, reserved engineer, but that person still has hustle, right? And you sort of have to look through those layers. So we've been trying to, interview people more or go through references, et cetera, to try to sort of decipher whether that person really does have the hustle or not.
What would that hustle be? Was it something that you had when you were the founder of VidQuick?
Yeah, I mean, it's just being aggressive, finding a way to get things done, to find the right contact within, whatever target client or corporation that you're going for. It's not just sort of sitting there and hoping that someone's going to give you the contact, right? I mean, you just got to find a way to get it done or get in or sell it or get the product finished, right?
Right. So this is the guy or the girl that can pick up the phone, pitch the CEO or get a meeting or is not afraid to ask for money. Is that what you mean by the hustle?
Yeah, exactly. And then on the flip side, though, but do it in a tactful, respectful way without burning bridges.
Right.
Because something... Yeah.
Not a boiler room style telephone pitch. What if you're a sort of an engineering type CEO who maybe doesn't have that, maybe is more product focused? What could they do if they're not sort of naturally a hustler?
Then I think you really have to know yourself. And that's also some of the problems with some entrepreneurs is that they don't know themselves. So then if that was the case in my situation, if I was that person, I would go find a business guy, right? I would find a guy that could sort of, that you partner with, that you could work with, that knows that could balance out your sort of shortcomings and weaknesses. But that's a whole nother sort of ego issue too. I mean, that's something that founders have to work through, I think.
Right. And you were a co-founder of VidQuick, so you obviously had partners. I know you mentioned your co-founder already earlier on. When you look at the cohort coming through in your accelerator. Do you ever consider single founders? Is it quite rare? I mean, what's the sort of situation with that? Because it seems the norm today to have two guys, right? Two co-founders. Is that how it is with you guys?
Yeah, generally, maybe we've taken one or two companies with single co-founders. I mean, I think for practical reasons and also statistically, I mean, there's been like various studies from MIT and other schools where the success rate of a startup exponentially increases when there's two co-founders, then three, and I think maybe it tops off at four where there's no real difference, or there's maybe even a decline. But, you know, being a single founder is really hard. I mean, just it's obviously mentally exhausting at times. And if you don't have someone that's of equal status that you could bounce off ideas, you know, not someone that you always have leverage against, or if you get insecure in moments and all of a sudden you just say you have the final say because you have the most shares or something. I mean, I don't think that really works out. If anything, that's really detrimental to a startup. You have to have some type of balance. So,
And your previous co-founder, sorry, what was his name again?
Well, for my first two startups, it was Jimmy Kim.
Jimmy. Yeah. So how was the balance there with that relationship? Was one of you good at sort of more the salesy type work and one was good more at the engineering type work? Was there sort of a yin-yang type relationship there?
Yeah, well, we had a triumvirate where it was Peter was our CTO, then it was Jimmy and I. We were both sort of business guys. I was probably more product oriented. He was more outward sales. But it was a good balance, good chemistry. That's why we actually went through two startups. And then we came back for this accelerator and fund. I mean, it got heated at times, so we never took anything personally. I mean, there's several times where we were yelling at each other in a conference room.
Right.
But at the end of the day, I mean, we never took anything personally. And then, you know, we agreed during those times, our first two startups, that it has to be a group decision. If it's 2-1, then you live with it. And that happened to me several times where my decision got shot down and, you know, you just live with it and move on.
Right.
Yeah.
But you know that team together can accomplish so much more. And I think advice for single entrepreneurs out there is to seek a co-founder, right? I mean, unless, for example, maybe they've had experience and they've already had an exit or they've already had a lot of, you know, experience in a certain domain, they feel confident they can do it on their own. But especially for somebody starting out with an idea is to, you know, find a co-founder they can work with. Because as you say, statistically, you're far more likely to succeed. And I think also you're far more likely to get the attention of a VC or an angel investor, because for them it's a lot less risk, isn't it? Dealing with two guys rather than one, or maybe dealing with three guys. For them, one guy is a higher risk. It's a higher uncertainty, isn't it?
It's a higher risk, and like you said, unless you already had a successful exit. And then just practically speaking, I mean, just doing a startup is hard. It's like hard. It's like taxing. It's like stressful, right? You need someone to like bounce off with, complain, whatever, right? Carry the weight when maybe you have things going on personally or other issues, and then that person could sort of carry the weight for a month or so. I mean, it's just about teamwork, right? You need that. I think it's critical to success, but it's also finding that right chemistry too, because on the flip side, probably the lack of chemistry, lack of trust has been a huge factor in the failure rate of startups too. So,
Hey, Bernard, let's talk about startups that want to get into an accelerator program like yours. What sort of stage should they approach you? You know, should they do it when they have the idea? Should they have customers? Should they have a product? What is the sweet spot at which they should approach you?
So, I mean, our accelerator program is the whole range from Bootstrap to even companies that raise 3 million plus on a Series A. So, you know, it's really hard to say. I mean, if they are already doing well domestically, let's say in Korea, then obviously the best time to approach this is when they think they're really ready to seriously look, not like, you know, test out a market for like a month or so, but really look, you know, abroad. You know, that's probably ideal. It could be if you're bootstrapped, then if it's a product that we think has huge potential, right, especially globally, and coming out of Korea, then we'll take a look at it. I mean, taking a step back, I think whether it's from our accelerator or even our seed fund, most entrepreneurs just have to know what that firm or that partner at the fund is looking for, right? Because it probably falls into two buckets. Like there's people that like a general area, whether it's like, let's say like consumer mobile apps, right? They'll like it and they're looking for certain metrics, etc. And on the other side, there's investors that might have a specific thesis, right? So they're actually looking for a specific product. And if you fit into it, then they'll invest early. If not, they'll be looking for certain metrics that you have to hit before they're really willing to pull the trigger and invest in you.
Right. So it's important for the founders to know the background of the fund, right? The accelerator, the team, the people involved before they approach them, right? Because what you're saying is that accelerator is going to have certain criteria or certain specialities or certain, areas where they want to fill, which
Yes.
you may fall into, right? Okay. So I know you mentioned Bootstrap businesses as well. They interest me because we have a number of entrepreneurs who consider themselves bootstrap entrepreneurs. And naturally, normally they wouldn't look at VC fundings or even talk to VCs. Why should they be involved with an accelerator?
Well, I mean, at the accelerator level, I mean, it's not that expensive, first of all, right? And if you think that you need sort of a little more sort of development or traction in an area or sales, then I think an accelerator program, a good one, could be ideal for you, right? To sort of take you to the next level. And then when you're ready to get, outside funding, right? So that's what we do a lot of times is if it's a bootstrap company and they really need to they still haven't found their product market fit, right? And that they need to sort of develop that further, then they'll enter our program and we sort of, have them go through the ringer on that. I mean, the benefit of our team is that we have 6 partners that are current or former entrepreneurs, and actually 4 of us have been on the product development side. You also have to look at the accelerator program and the background of the partners, right?
Okay, I want to talk about one of the success stories that you've had, which I think is very interesting, Mimibox. Can we talk a little bit about them and, what happened to them and how you got involved with this company?
Yeah, so Mimibox is doing very well right now, and they came through our first accelerator class. So when they applied, they already hit over $1 million in revenues in Korea. They went through that, and then the second year they hit, I'll just say it's above 4 million. So they're doing well the second year. We were helping them enter the Japanese market. They got frustrated, they hit some roadblocks, and then they looked towards the US. And that's when they applied to Y Combinator. They got in, and then they also had a lot of hype afterwards where, on TechCrunch or whatever, I guess internally they were voted top 3 within their class. They had a lot of buzz and fanfare afterwards, and then they closed a Series A with Formation 8, and then they closed Series B with Formation 8 and some other top-tier investors. So they've just been on a very good growth path in terms of their sales and revenues in Korea, US, and China.
And they sell Korean beauty products.
So this is a funny story, too. It's like when Dino applied, I told him, I was like, hey, you're doing very well, but we don't like subscription e-commerce. At that time, it was 2012. We're like, we think it's on a downward trend. And Dino was like, hey, let me know and I'll pivot. All right. So we liked him because he was very determined, but he was also very flexible in his thinking. Right. So he was very teachable. So that's something actually that we like in entrepreneurs is that they have that hustle and drive, but they also sort of know when to fold, like in poker, right? Right. You have to sort of have that drive up to a certain point, but also not be too stubborn, which is sort of a delicate balance.
He can take advice, basically.
Yeah, exactly. So Dino was willing, but then, we learned from him that, they just curate very well. So whether it's subscription e-commerce, regular e-commerce, or brick and mortar, like it's all about the buyer. I mean, you hear these stories of like one Macy's buyer in New York that drove sales for the men's department for 20 years. And then when he retired, sales went flat. Right. It's sort of like that. It's like it's very much not exact science, but what we learned is that Mimibox just curated very well, and then from there they actually expanded. They went from subscription e-commerce in Korea to regular e-commerce, and then last year they launched a third leg of their business, which is private label products. I call them now the Xiaomi of beauty because they launched these private label makeup brushes, like beauty brushes. And then within a few hours, they sold something like, I forgot, over 18,000.
Right.
Through their channel. So it's like
a Xiaomi, they're selling out in seconds.
Yeah. So that's like their third leg of their business that they've been developing. And they'll sort of follow that pattern, I guess, within each of their countries that they're targeting.
When you look at a business like Mimibox, it doesn't look like a traditional, even can use that word, traditional startup investment that you would find in Silicon Valley. You would have, first of all, it's Korean. Secondly, it's beauty products. Somebody might look at that and say, well, compare that to something like a Dropbox. I don't really see the parallels here. I don't see the opportunity. Why is it you got involved with that? Why is it you saw the opportunity in something like that rather than, one of these like software as a service type businesses?
Well, a lot of it will happen to be just founder and CEO. The year before in the US, these subscription boxes were sort of hot. There was a similar product called Birchbox out of New York, but they were sort of a cheaper $10 a month box with samples. Mimibox, when they launched in the US, they went total high end. It was $30 a month, full on product, right? And so in some ways that was risky, but they knew what they were doing, right? And that's how they succeeded. So I think Dino is very determined, but calculating, right, in his execution. And they just simply execute very well. And that's what we saw from our accelerator. And that's why we felt confident in backing them also from our seed fund side. I mean, it really is about, the founder and the CEO and the entrepreneur, right?
Could you see that when you meet a founder for the first time, that this person executes very well? Can you see that in their personality? What sort of things do you look for?
I mean, you try, but it's hard. It's like when you're hiring for a company. I mean, maybe you could see 50 to 80% of it. I mean, you never know. I mean, that's why even before I became an investor, I mean, even early in my 20s, because I was actually involved in politics, I never go by first impressions, right? Because someone could have a good day or a bad day, and you just never know. And that's actually sort of been revealed, because some of the people that we thought were going to be awesome execution have turned out to be our worst companies.
That's interesting.
Right? So it's just hard. It's hard to read. That's why after some initial misreads, we try to be more thorough in references and really getting to know them. But you are dealing with limited information. And especially since it's at the seed stage, these deals go fast. If it's a hot deal in Silicon Valley, I mean, you could close within like 2 weeks, 3 weeks, right? So you're trying to rush in these decisions. And sometimes, obviously you make mistakes.
Right. So from the founder's perspective, what do they need to know in that process? Because, what you're saying is it's difficult to read that first encounter, that first meeting successfully, to get all the information. How can the founder help with that? How can, if somebody was to come in and talk to you guys today, you've got a meeting, they've got a product, or they've got an idea, they've got a concept, they have maybe customers, whatever it is, what's going to make that work for you such that you can reduce your risk and, you can get involved with these guys?
I think it's probably a common thing that you hear. If they come in referred, that obviously is like, I think half the battle, right? Because if they come in referred from a friend or a friend of the firm or someone that we know that has actually even worked with the entrepreneur, that's a big plus, right? Because there you mitigate a lot of risk. From that, then it's just a matter of us, getting to know them and them being transparent, right? Definitely, at least me personally, I mean, each one of our partners is different, but I just don't want to deal with like any gamesmanship or people being coy or vague or whatever. I mean, I don't even want to deal with like startups that say that they're stealth and,
Got it.
Yeah.
So referral is key here. Is that a referral from another partner or from one of your alumni? What would be best for you?
Just from a trusted source. So yeah, it could be one of our portfolio companies. It could be someone that we worked with in the past, another co-investor at a VC firm that we know well.
And do you expect them to come and pitch you to present your idea in that sort of, that dragons, or what do they call it? Dragons dental pitch? Is that how it works with you guys in that first meeting? Or is your first meeting more about relationships building?
Oh, it's pretty casual. I mean, most of the time I just, I think all of us actually just probably meet them in an office or a cafe or whatever and just hear their story, right? We want to know their story, want to know how they developed the idea, what their background is, and then just talk casually about what they're trying to build, sort of their vision. Right. So it's not like any like formal pitch or process in that way.
You want to get behind the initial sort of veneer of the presentation. You want to learn a bit about them and the people, right? Because it's important for you to understand the team and also the chemistry between the team, right? Because there may be some telltale signs there that may sort of give you indications as to their strengths and weaknesses.
Exactly. Yeah, definitely team dynamics is also key. I mean, just because I think, that could be a red flag sometimes. So.
Bernard, let's talk about what excites you in terms of markets and areas of investment. What really what keeps you up at night and keeps you thinking through? What keeps you, buzzing about different markets. What kind of markets get you excited? Where should we be focused at the moment in terms of looking at the next big thing? Do these kind of things interest you? What kind of trends concern you at the moment?
Well, we're pretty broad as a firm, so we look at a lot of things. I mean, we have been active in looking at a lot of fintech deals, disruption within the financial sectors, whether it's in the US, Europe, or Asia. We like hardware and IoT, even though that is a tough space. We really believe in sort of the future of connected devices. We have been looking at a lot more at digital health. And then obviously everyone is talking about AI, but we do look at a lot of AI plays, whether it's related to drug discovery or insurance or industrials.
And you've made 58, I believe, investments in the last 2 years. In terms of how that's split, you've got 20 in Silicon Valley and the rest in Europe and Asia. Mm-hmm. I want to talk about those other markets outside of Silicon Valley. You produce a really thoughtful and informative piece of research. You did this last year, the Global Technology Trends and Startup Hubs. And from that research, you basically ranked the startup hubs and looked at the different criteria, what made each ecosystem, each area stand out. Obviously, Silicon Valley came at the top. Was there any surprises from that research? Any sort of cities or areas or startup hubs that surprised you in terms of their strengths or weaknesses?
No, not really. I mean, there's more confirmation. I mean, maybe confirmation for me in terms of, let's say, Stockholm. Frank, my partner Frank in London, he was on Spotify's board for a while, and he was an investor there when he was at Horizons. So he was already big on Sweden and Stockholm. And then Net, our colleague in Tel Aviv, actually grew up in Sweden too. So they were already big on Sweden and Stockholm. I was I was lukewarm. But then when our research sort of came out, like Stockholm has, I think, the largest number of unicorns per capita. So for such a small city, it is a vibrant ecosystem. And we do see a lot of good deal flow out of there.
What makes it a success? You mentioned some of the factors in your list, some of these soft factors as well, which I find quite interesting.
Yeah, so I think they do have a sort of good sort of mentoring network within Stockholm. They have good talent, obviously, and then they also have access to capital. And people obviously have seen the success stories that have come out of Stockholm. So that's sort of just continued. People feel comfortable, investing in companies or teams that come out of there versus, let's say, if it's like a relatively unknown city or a city that isn't as recognized, let's say if it's like Paris or Munich or something. So
right. That point about the active mentoring is one of the success stories of Silicon Valley, isn't it? And it's perhaps one of the reasons why a lot of these cities that try and replicate the success story of Silicon Valley often fail because they build the infrastructure, but they aren't able to curate this active mentoring. What exactly is that? I mean, how does that sort of play out in Silicon Valley? And how important is it for the startups and the alumni that you work with?
I think it's the most important factor. I mean, there's been, I'm sure, numerous sort of op-eds and commentary from people here. It really is this pay it forward culture that's relatively unique to Silicon Valley. I mean, I used to work for a family office down in Irvine. And for 3 years, I used to fly down to Irvine. And LA, it's only a 6-hour drive, hour and a half flight down, but it's two different worlds, right? It's a Hollywood culture where people sort of guard their Rolodex. They're very reluctant to share contacts. And even, to a lesser degree, even New York. New York, it's more finance related. It's who you know. So they're not as open. In Silicon Valley, it really is, hey, if you're not crazy or completely out of your mind, I'll introduce you to someone. Right? I'll introduce you to my contact. Hey, you should meet this guy. Maybe he could help you out. There's no sort of fear of people taking ideas. And that's also something that's unique. I go to New York and I go a lot of these startups, or they ask for like signing NDAs. We're like, no one signs NDAs in Silicon Valley.
That was like 20 years ago in the .com boom, right? You couldn't have a conversation without an NDA.
Yeah, exactly. Because every entrepreneur in Silicon Valley knows, like, if you have a good idea, there's 10, 20 other people thinking at the same idea, and it's just about execution. It's not about IP or whatever, right? So it really is this unique culture that has built up over the past decades in Silicon Valley, where people are just willing to just share and network. Right.
And do you think, if you were to come somewhere like here in Tokyo, we have a lot of innovative activity. There's a lot of technology heritage here. But, there seems to be this something missing. Whether that's a lack of appetite for risk that maybe exists in places like Silicon Valley, but, or it's this lack of this pay it forward culture. What do you think, especially for Asian cities, that they need to focus on? What do you think is the missing formula here?
I really do think that, at least from what I know of Tokyo and even Seoul, it is this having this pay it forward culture, right? And entrepreneurs that were in the first wave of successes, that they should have paid it forward. They should have had generous stock option pools, et cetera. So, when I look at even the first wave in the 90s in Korea, right, when Nexon was created and NHN, it's part sort of legal and financial infrastructure issues within Korea. But still, if they were more generous in terms of stock options, et cetera, like that should have fueled the next generation of angel investors, right?
Right.
Korea missed the boat on that, right? That's why you see it's pay it forward in advice, but also money, right? So all the first wave of IPOs here from like Apple, Cisco, Yahoo, then it went to Google, right? Google created probably the most, like 1,000 Google millionaires, and a good percentage of those became angel investors. That's what should have happened in Korea too, but they didn't. Right. There's only a handful that came from there that became active angel investors and sort of, fueled the ecosystem once again.
That's very interesting. You look at the successes of the PayPal alumni as an example, right? And how important that is for nurturing the next generation of entrepreneurs. If I was an entrepreneur in Asia and I have a startup which is gaining traction, would I seriously need to consider moving to somewhere like Silicon Valley, or would that be a crazy idea because it's just so saturated at the moment? On the basis of what we've just talked about, the pay it forward culture and access to capital and so on.
It just really depends on the company and what you're trying to do and what you're trying to target. An easy example is like gaming. If it's online gaming, I would just stay in Asia, right? That could do very well on its own and then be $1 billion company out of Asia easily. If it's sort of other types of technologies, whether it's AI or something like that, then maybe you do have to consider moving to the Valley. I think that's even on the accelerator side, we looked at Israel. That's what Israel does very well. Early on, they have to look at the US market, right? From the very beginning. And then a lot of Israeli startups, they come here, they localize, they find, the hire locally. They eventually, maybe even at the A or B rounds, they might bring a CEO and the founding CEO might step into another role, whether it's CTO or CMO or whatever. And that's something that we actually give advice to on the Korean startups that go through our accelerator.
Would they be best positioned to establish their business first before they came to Silicon Valley, actually find paying customers and so on? Or would they have more leverage doing that? Or would it be the sooner the better?
I think it depends on the business, but at least for Korean companies, I think it's good that they establish themselves in Korea first, gain sort of good traction, et cetera, be stable. And then when they're ready, tackle that market. Korea is still an attractive market. It's a tweener, an in-between market. It's a small country of 50 million, but you can create billion-dollar internet companies out of there, right? But you just can't do it too late like Kakao did, right? Like Kakao should have gone international 2 years earlier. They didn't. They dominated Korea, but that's why NHN sent the Line team to Tokyo because they couldn't penetrate Korea, and that benefited NHN and Line better. Exactly.
It's important to get the timing right here, but that's why it's important also to get some global perspective in terms of your mentoring and advice, isn't it? Somebody who can see it from that perspective rather than somebody who just knows one market very well. Okay, that's Bernard Moon, everybody. VC, global investor and technology entrepreneur. Hey, I recommend people go and check out your Global Technology Trends and Startup Hubs report. The SlideShare deck is well worth checking out. Available on slideshare.net/Bernard Moon. Hey, Bernard, where do we find out more about you?
Go to our website, sparklabsglobal.com, or people could feel free to email me at bernard@sparklabsglobal.com.
It's great having you on the show. Thanks for sharing your advice for both startups, bootstrap entrepreneurs, and investors on the show. Thanks for joining us, Bernard.
Okay, it was really fun. Thanks for having me.
Founder FM, voice of the entrepreneur. Find out more at www.founderfm.com.